Hey everyone, and welcome back. We're diving into a topic I know a lot of you are interested in, how the Fed's actions have these ripple effects on, well, practically everything.
It's all connected, isn't it?
It really is.
Yeah.
And we're going to break down exactly how we'll cover interest rates, what's going on with Bitcoin, the stock market, even that story you said about government aid. We're going to unpack all of that today.
Sounds like a plan.
All right, so you know how sometimes you read about the economy
Yeah.
and it feels like everyone's speaking different language? We're going to decode some of that today.
Absolutely. Transparency is key.
You got it. So first things first, we've got these articles about the Fed potentially making some big moves with interest rates, and they mentioned this term basis points. Now, for anyone who's, not a financial expert,
Right. It can sound a little jargony, can it?
exactly, 100 basis points. What does that even mean? Well, basically, think of it this way. 100 basis points equals a 1% change in an interest rate.
So when we're talking about the Fed potentially slashing rates, let's say, by 100 basis points,
They're talking about lowering those rates by a full percentage point.
which can have a huge impact.
Huge, yeah.
Yeah.
So, imagine this. The economy is a giant orchestra,
Okay, I like this analogy.
and the Fed, they're the conductors, right?
Mhm.
They're up there on the podium, and Jerome Powell, he's got the baton. Now, when the Fed adjusts interest rates, it's kind of like they're changing the tempo of the entire musical piece.
So if they cut rates, that's like telling the orchestra to slow down a bit, maybe play a little softer.
Exactly. It's all about trying to find that sweet spot, that right tempo to keep the economy moving, ideally without any instruments going out of tune. But
But, and there's always a but, isn't there? Sometimes those well-intentioned tempo changes can have some unintended consequences.
like what kinds of consequences?
Well, think about it. If it's cheaper to borrow money, businesses might be more likely to take out loans, expand, hire more people, right?
Right, so it's like stimulating the economy.
Exactly, stepping on the gas pedal a bit. But too much gas, and you risk things like inflation and what we call asset bubbles.
And those aren't good.
Not always. See, inflation, that's when prices for everything, your groceries, your rent, your morning coffee, they start going up faster than wages. So your money doesn't go as far.
Which puts a real strain on people's budgets.
Exactly. And asset bubbles, that's when the price of something, let's say houses, stocks, even cryptocurrencies, it gets inflated way beyond its real value. It's like blowing up a balloon too much.
It looks impressive for a while, but
But eventually it's going to burst. And when those bubbles pop, it can have a ripple effect throughout the entire economy.
like that housing market crash we saw not too long ago.
Precisely. And those crashes, they can be devastating, especially for everyday people who are just trying to make ends meet.
So these low interest rates, while they might sound good on paper, they're not a magic solution.
There's always a trade-off, a balance to be struck. And that's what makes economics so fascinating, but also incredibly complex.
Because it's not just numbers and charts, it's people's lives.
Exactly. It's about understanding how these policies, these seemingly abstract concepts, have a real-world impact on all of us.
Okay, so we've got this potential for inflation, this risk of asset bubbles, all stemming from these low interest rates. And you know what else the articles mention? Bitcoin.
Ah, yes, Bitcoin, the digital gold.
Exactly. Apparently, it tends to do pretty well when the Fed cuts rates. Is that just a coincidence, or is there something more to it? So there's a connection between the Fed's moves on interest rates and what happens with Bitcoin.
It's all about where investors choose to put their money. See, when interest rates are low, traditional investments like bonds, they just don't seem as appealing.
Because the returns are smaller.
Exactly. So investors, they start looking for other places to put their money, places where they might see bigger gains. And Bitcoin, with its history of, some might say volatility, others opportunity, well, it starts to look pretty attractive.
So it's like, okay, if I'm not going to get much from the usual stuff, maybe Bitcoin's the way to go.
It's a bit of a gamble, no doubt. But high risk, high reward, right?
That makes sense.
Yeah.
But then there's Congressman Gates's idea about paying taxes with Bitcoin. That's a whole other side to this, isn't it?
It is. And to understand that piece, we have to remember something really crucial. The whole idea behind Bitcoin is that it's going to increase in value over time.
Right.
Right? So if you believe that, if you're holding on to Bitcoin because you think it'll be worth more in the future, well, using it to pay your taxes today might not be the savviest move.
Because you could be missing out on those potential gains down the line.
Exactly. It's like, imagine you have a $100 bill. Are you going to use that to buy a $5 cup of coffee?
Probably not. Not these days.
Exactly. It's about value. You believe that a $100 bill can do more for you down the line, so you're not going to waste it on something trivial. Same idea with Bitcoin. If you believe in its long-term potential, you're going to want to hold on to it.
That's a good point. Okay, so we've got this whole Bitcoin thing happening, but one thing that really stood out to me from the articles you sent was that statistic about government aid.
Oh, right. 53% of U.S. counties heavily reliant on it by 2022.
53%. That's huge. And what's crazy is back in 1970, it was only 1%. Did you have any idea it had gotten to that level?
It's a pretty stark reminder of how much things have changed, isn't it? And it's easy to look at that number, that 53%, and just think, oh, people are becoming too reliant on government assistance. But it's so much more complicated than that.
It's rarely that simple, is it?
Right. Remember we were talking about those rising housing costs and how wages haven't kept up with the cost of, well, everything.
Yeah, it's like a never-ending uphill battle for a lot of families.
And that's where those government programs come in. They're filling a gap. But here's the thing.
It's not a long-term solution.
Exactly. It's like putting a Band-Aid on a broken bone, you know? Might make you feel a little better temporarily, but it doesn't actually fix the problem.
So what is the problem then?
It's that gap. The gap between those who benefit from things like rising asset prices, like homeowners who've seen their equity just go through the roof, and those who are barely keeping their heads above water, just trying to make ends meet.
And that gap just keeps getting wider.
And that's what's really worrying. Because that kind of disparity, it doesn't just impact individuals, it affects our entire society. It can lead to instability, to social unrest. It's a complex issue with far-reaching consequences.
And it all ties back to these economic policies, these decisions being made that might seem distant from our everyday lives, but actually have a huge ripple effect.
Exactly. And that's why it's so important to stay informed, to understand these issues, because they affect all of us, whether we realize it or not.
It's like this whole chain reaction. You know, the Fed makes a move, and it sets off this whole cascade of consequences that we might not even see right away.
It's like a domino effect. And it highlights just how important it is to look at the bigger picture, to understand the long-term implications of these policies. Because what might seem like a good idea in the short term could have some pretty serious unintended consequences down the line.
Yeah, and it brings us back to that idea from Congressman Gates about paying taxes with Bitcoin. Because the articles seem to suggest that, well, it might not be the wisest financial decision.
It really comes down to how you view Bitcoin. If you see it as an investment, something that's going to increase in value over time, then using it to pay your taxes today is kind of like, well, using that $100 bill to buy a $5 cup of coffee.
Right. You're losing out on that potential future value.
Exactly. It's all about recognizing the long-term potential. Now, some people might argue that, hey, if you need to pay your taxes, you need to pay your taxes right. And if Bitcoin is what you have, then that's what you use.
I could see that side of it too. But it's still interesting to think about, like, is the government getting a good deal because they're valuing the Bitcoin at its current price, not what it could be worth down the line?
It definitely raises some interesting questions about how we value these digital assets, especially in the context of something like taxes. And it makes you wonder, what's the future of all this? Will we see a day when paying taxes with Bitcoin is commonplace? Or will we come up with entirely new systems? These are questions we'll have to grapple with as we move further into this digital age.
It's pretty mind-blowing when you think about how much has changed even in just the past few years. And the pace of change is only accelerating.
It's true. And that's why it's more important than ever to stay curious, to keep asking questions, to challenge our assumptions, and to really try to understand the forces that are shaping our world.
Well said. And I think that's a great note to wrap up on. So to everyone listening, thanks for joining us for this deep dive. We've covered a lot of ground today, from interest rates and asset bubbles to Bitcoin and government aid, and even touched on the potential for social unrest. Remember, knowledge is power. And the more you understand about how these complex systems work, the better equipped you'll be to navigate the challenges and opportunities that lie ahead.
And never stop asking why, because it's in those why questions that we often find the most insightful answers.
Yeah. Exactly. All right, that's it for today. Until next time, keep those questions coming and keep exploring.